Hi, everyone. Welcome to the Next Mountain podcast, where we explore transitions, finding your purpose, and creating meaningful impact. Today, we're joined by Patrick Lohr, a two-time founder and venture investor who founded and exited iStockPhoto to Getty. Patrick is known for his exceptional judgment with a sharp ability to read people. And as an investor, he's deeply hands-on, and he's working side by side with founders when it matters most. And so in this conversation, we dive into his journey from building iStockPhoto to exiting, and we're exploring how he's now supporting the next generation of founders. We'll explore also the mistakes he's made and how he's learned to be a better mentor. So I hope you'll enjoy this conversation. And if you do, please like and share the podcast so we can continue bringing you these wonderful conversations. And so now let's get started. So hello, Patrick. Welcome to the Next Mountain podcast.
Hi, Natalia. Hi, Marie. Great to see you.
So welcome. Good to have you here. Yeah, welcome. We're very excited to speak about your wonderful experience. I know you're going to have so many tips for our audience, but let's start with who you are. So how do you like to introduce yourself?
Well, my name is Patrick Lohr, and currently I'm managing partner of Panache Ventures. Panache Ventures is a early stage investor. We invest exclusively in technology ventures. At the early stage, we typically call that pre-seed and seed stage. We're writing $1.5 million checks into companies, basically disrupting the next stage of all the greatest businesses out there.
And there aren't many that do that in Canada, right?
Yeah, well, pre-seed and seed has been an incredible opportunity for us. And I think there's a lot more talent that could use some, use some capital to help accelerate them in that path. I think Canadians are privy to an incredible social system, and that includes healthcare, that includes education, that includes all the great mentors and support systems that we have around us. And we think that builds a great environment for entrepreneurship. And from where we sit here in Canada, we basically have great trade relations with most of the world. And we think you can build great companies from right here in Canada and anywhere in Canada. So we've invested everywhere from coast to coast. We've invested in Yukon, all the way across Canada, all the way to Newfoundland.
You were once an entrepreneur, and at that time, I was actually a graphic designer using your product quite a bit. And so would you mind sharing a little bit of what we call your first mountain? How did you start it? How did that come to the success it was?
Yeah, well, I also started as a graphic designer. So I started at a small marketing department. And that's where I really learned how to use a Macintosh, how to work with account managers, how to work with copywriters. From there, I ended up landing a job at Adobe. And at Adobe, I basically created the product that we sold to designers. And that was really the first generation of product. I started at a time before the internet was really a thing. And so what we did was we created fonts, photos, and clip art. We stuck them on diskettes and CD-ROMs. And then when people would call us up and give us credit cards, we would just put it in a FedEx box and we would overnight it to them. And they would take those discs, stick them in their computers, and basically start using these fonts and photos. And then after Adobe, I went back to school. I got an MBA. And out of that experience, I just put all the elements together. I took what I learned in the MBA, I took what I learned at Adobe, and we put it all together. And we got a team that was basically just cobbling stuff together to create a stock photo community. And that was iStockPhoto. And we didn't really know we were doing it at the time. We were just doing it because it was what we knew what to do. We were a bunch of designers. We really knew how to work with kind of low budget campaigns. And so we didn't have budget for photography. So that made you really work at getting creative and stretching the budget. And so we thought, well, wouldn't it be great if, you could exchange photographs with your friends? And so I've got a bunch of excess photographs on my hard drive. So do you. Maybe we can exchange a little bit. And that was really the idea of iStockPhoto. And what that morphed into was a much more formalized exchange where we became the world's largest and first crowdsourced stock photography website. We put an economic system in where you could upload your photos and you would collect a royalty off of them. And then on the buyer side, we basically took care of everything. We took care of the rights. We took care of the discounts. We basically took care of almost everything that you could needed on the agency side and then wrapped it all together. So that ended up becoming a multi-million dollar business. We sold that to Getty Images in 2006. And the rest is history. iStockPhoto remains a very, very important brand in the Getty Images family. They had made some like 70 acquisitions before that. And I think they continue to make acquisitions. But iStockPhoto is one of the ones that they retained because the community was so strong. So I think in a lot of ways, not only did we discover how to put together a product on the technical side, but we discovered the power of community, and we owe a lot to the community that contributed to iStock.
And I like what you say about we didn't have budgets, or so we were kind of making do with what we had, which is, I think, sometimes really a underappreciated approach to entrepreneurship, which is like people think like, oh, we're going to have like these grand ideas and then raise a couple $1 million to make it happen, as opposed to like making dinner with what's in the fridge kind of approach. So how did that inform like moving forward in your other entrepreneurial venture? Or how did you take what you learned moving forward?
Well, I think it's really important to adjust your mindset to basically create the best conditions for success. And I would say sometimes too much money is no good. I think a lot of times too much money makes you a little bit lazy. Or let me speak for myself: a little too much money uh, in in the companies that I've been at the past has kind of given us a little too much confidence in just thinking that money can solve all of our problems. And then on the opposite end, I think lack of money kind of puts a little too much stress on you. But I think that just having just enough money, not too much, not too little, I think having a limited budget, and the limited budget and the constraints around that create conditions for a lot of creative thinking. And so I think constraints a lot of times equals creativity. And for us, we just had to get super creative a lot of the time. Now, I think in the early days, we were starving, but as we got going, as a community started supporting us a lot more, we started seeing the power of how community could really leverage a dollar. So, for instance, one of the things that we found was that we could pay X amount of dollars for advertising, but when our community got a hold of it, they just said, "Well, can we tell our friends about it?" And when we leveraged that, we found that our dollar went 10x of a typical advertising budget. And so those were the kind of things that we discovered. And so now I think what I think about in building business is really about putting just the right amount of money in, but not too much. And in fact, keeping your mind sharp, basically thinking about the ways to best utilize your dollars is actually part of the creative process and part of the entrepreneurial process.
Hmm. And Pat, I'm curious, when you started iStock, it sounds that it was a need. You needed that, or you created it out of a need. And then when did it become the story of a business and a possible exit? Like, how did that transformation go about? When did you decide it was time to sell, for example?
Yeah, I think that these things they're always different when you analyze them, in
After.
hindsight. But if I
Yeah.
were to put myself back in the moment and think about what was going through my mind, I was raising a young family at the time. So there was always this stress about what I would do to put my kids through college, for instance. And what I would, our house always seemed too small and too messy. And it always seems like there was too many bills coming up. And so there was all that pressure building around my life. And then of course the business was always filled with complications. But I think through it all, one of the things that we thought was absolutely incredible was the business at creating innovations in the space. And so what we got back as far as feedback from the audience goes, from the customers, was really just people praising us around how incredible the product was, how it changed their lives. And that really motivated us quite a bit. And so that really, really kept us going in the early days. Before there was money, I think people heaped a lot of praise on us and just said, wow, this is super unique. And then from there, we started getting a little more traction. We were able to pay our bills. We were able to get better infrastructure. Like, for instance, the site would crash all the time and not be able to do its thing. And then we were able to have less crashes because we were able to buy better equipment as we got a little more support. And so I would say we started gaining real confidence probably 2 years into building iStockPhoto. And then
Okay.
as we got more confidence, we were able to go and take that confidence and start talking to partners. And so we went on the road, we went to California, we went to New York, we talked to more customers, we talked to more partners, and the momentum just built from there. Eventually, we started getting a lot of acquisition offers. And what I would say is that reflecting back on that, we had a pretty good outcome in getting the deal that we got. But I think that had we had more coaching or better coaching, or maybe if we were better mentees, maybe if we were listening to the coaching we were getting, that we would have kept the business a little bit longer and we would have understood a little bit more about what financing would have meant for us. And we could have kept growing with the company. As it turns out, I think that we had a pretty good outcome. But I think if we held on for a few more years, it would have been a much bigger exit for us. So I think that for me, the philosophy that I take today is how do I work with my entrepreneurs so that they can get the best possible outcome? And I think that it's informed by the experience that I went through, which is there was so much stress on me that I couldn't listen to all the advice that I was getting. Right. So I think creating the conditions so that you can have a really great conversation between mentor and mentee, I think is part of my job today.
So, from exited entrepreneur to investor, how did that happen? How quick was that, and what informed that transition?
Well, it's really interesting what happens after you exit. It's that you get a lot of phone calls. So iStockPhoto had a pretty public exit in that there was a lot of news about it. And so we were on every blog site. There was quite a bit of publicity around it as well. And we were getting asked to speak at conferences about the exit. We were being asked to coach companies. We were asked to be on advisory boards. So the whole deal. And I think as part of it, we were asked to invest in other ventures and we were asked to invest in venture funds. And so I started doing a bunch of angel investing. I started investing in venture funds. And what I found was that as an angel, I didn't have a lot of discipline. I would meet somebody and I would just go, great story, and just write them a check. But I didn't really have the tools to manage that investment or to coach that founder through. And I found that with my venture capital friends, they had a system. And so I invested in a few venture capital firms and I started learning with them. And so with one of the funds that I joined, they asked me to become entrepreneur in residence and later sit on their investment committee. And so I just learned the tools of the trade to become a good investor. And I think those are distinctly different skill sets. I think that a lot of the times the assumption is that if you're a good entrepreneur, you can be a good investor. And I think that it's those are two very different jobs. So I would say that it neither is true. I think if you're a great investor, you might or might not be a great entrepreneur, and vice versa.
Yeah, that's something we've heard a lot, we've seen a lot, especially on the angel investing side, because entrepreneur, like you mentioned, like usually a lot of them are very enthusiastic. They have an appetite for risk. They want to kind of stay in the game after they exit. They kind of want to feel that energy of being in the trenches, but being an investor is a completely different skill set. So, like, what did you notice some changes in your approach or your mindset when hearing some of those stories with this, new knowledge you were learning or these new skills?
Yeah, I think there's a great kind of board governance rule that kind of says that kind of says noses in and hands out, meaning you want to be nosy, you want to ask a lot of questions, you want to explore a lot of topics, but you never want to stick your hands in and get your fingers messy in the operations of the business. And so I think that as a investor, your job isn't to run the business. And so you got to be careful about getting in too deep and doing what's right for the entrepreneur, which is really making sure that the entrepreneur has enough of your wisdom and enough of your guidance to move forward. But you're never going to operate the business. And I think the other way to think about it is that you should think about yourself as more of a mentor than anything else. And there's a great study out there which looks at crystallized intelligence versus a fluidic intelligence. And think of fluidic intelligence as if your brain were a computer. Think of that as your CPU. It's your raw processing power. And that peaks around the time that you're in your 30s. And so the best time to be an entrepreneur is in your 30s because your processing power is just incredible. Your ability to crunch through numbers and crunch through strategic situations is just amazing. And that, excuse me, and that declines over time. And what'll happen over time is that your crystallized intelligence starts to accumulate. So that starts out low and builds over time. So it's probably, you're probably way higher in fluidic intelligence versus crystallized intelligence when you're 30, and it inverts when you're 50 or 60, which means that you're just smarter at something else. You've got more wisdom than processing power, meaning that you should be a mentor when you're older. You should be an entrepreneur when you're younger. And those curves really peak around the fluidic intelligence curve peaks around 30. Crystallized intelligence curve, I think, peaks around 50, 60, 70.
Yeah, I think it's Artis who broke among. So there's that right about that, right? And using property both to land the second half of your life. Yeah. And so I wonder if before we continue on that track, would you mind sharing, Pat, a little bit what it was like for you to exit and maybe the surprises, what happened that you didn't expect? What was hard? What was easy? Anything you'd like to share? You mentioned you had a family. So how was that, for example, right? The
Yeah.
relationship with them.
Yeah. There were a bunch of things with the exit that I thought were really, really interesting. First of all, it felt like there was a piece of you that
Mhm.
was just being pulled away. Like something that's so important for you, something that you grew and might have even been a part of you.
Yeah.
And what it feels like initially is that you can't live without it and it can't live without you. And neither is true. And I found that out in the strangest way possible, which is when I left, there was a lot of angst on both sides. Like the team basically said, "Oh man, listen, we're going to need to retain you. We're going to have to put you on a consulting contract because we might not know where the keys to all the information are. So expect a lot of phone calls." And none of that happened. It turns out
Mm.
that the team was doing so well that I rarely got a call. And when I got a call, I was all excited and I thought, "Oh, they're going to ask me a really important question." And I think the question was something like, "Hey, Pat, where are the keys to the filing cabinet?" And so that was kind of my utility near the end. And I think that reflecting back on that, I have to be super proud of how well the team adapted. Myself and the chief operating officer of the company at the time did about a 6-month due diligence process up until the point of the sale. And it was such an intense process that we basically couldn't do our regular jobs. And so in that 6 months, we had trained the rest of the team to do the rest of our jobs. And over that 6 months, the team just performed incredibly well. It was such that we signed the papers and I went back to work and there was almost no work. The team around me had just taken over everything. So, and I still talk to the guys today. I'm just so incredibly proud of what they've been able to do with their career. But it just showed the ability and the dedication of the team to carry forward. Now, for me, what that meant was it was a huge hit to the ego because I think founders are always thinking this company cannot live without me. And I think especially during the early days, that's true. I think as you build the team members around you, our team was so enthusiastic about taking on more work that I think it would have happened naturally regardless, that they would have worked me out of my job. And I think for me, it was just adjusting to a time where I was so important and so critical to the job that, and then almost overnight, I think over a period of a few months, that they'd weaned themselves off of me. And I was sitting at home without a lot of things to do. I hadn't planned what I would do with my couple of years off. Um,
So
so I
so
had
Surprise!
nowhere
those
to go.
Surprise!
so yeah.
Yeah.
So what did you find yourself doing during those couple of years off?
Yeah.
Well, I think it starts off with hanging around the house and just sitting in the living room. And I was hanging out with my wife. Kids were in school and she was watching Oprah. And I was catching a little bit of Oprah. And I said, how can you watch this crap? And sorry, Oprah, I do love a bunch of your stuff, but apparently a bad episode. And she just goes, you got to go and find something to do. And so that was really the journey. Was I just went, yeah, I guess I shouldn't hang around the house all day. And so I kind of looked through my email box, which I had ignored. There was a ton of emails in there requesting meetings and speaking engagements and whatever, and investment opportunities, all of which I ignored. And I just started taking on some meetings, and it kind of just ballooned from there. I started just developing a little bit of a taste around what I liked, what I didn't like, and found the next journey. And then part of that was just getting some pretty decent offers to join either associations or start looking at different companies. And so my job became just having coffee with people from there on in. And I found that it didn't pay very well, but at least it kept your brain going.
I wonder if was the graphic designer still in you there somewhere, or because I'm wondering if you, I don't know, was art part of your life and suddenly you had time for it, or what did you have time for that perhaps you could not do when an entrepreneur, but now you could, other than drinking
Yeah,
coffee with
well,
people.
yeah, I don't know if I was ever a great graphic designer, but I was always somewhat of a creative marketer. So I think for me, there was a lot of reading and a lot of trying to understand what was happening in the creative world and in the marketing world at that time. And so yeah, it was an exploration to see what people were working on and what was working, what wasn't working. And I think that started giving me more ideas on how people were building great businesses, because I still believe that the go-to-market piece is one of the most important pieces of building a business. And go-to-market is where most companies fail in execution.
Yeah, well, you mentioned, from the beginning, there's this thread of community, of bringing people together, and it sounds like you found your way back into active life through that. Having coffee with people, and so moving forward to what you're doing today. How does that care for bringing people together, and mentoring? How does that express itself in your day to day work and the places you go? Yeah.
Yeah, well, I think there's quite a few elements involved in this. I think having been there is a piece of it, but I think understanding the basics of communication and the basics of how people think is really important as well. So one of the things that I base a lot of my coaching on, a lot of my communications on, is around building trust. Because I think that the reason why most people just cannot listen or participate fully in a conversation is because they don't understand what they want out of that conversation, but they also don't fully trust the person on the other side. And so I think there's a couple of things. Most entrepreneurs are looking for validation rather than information, and I think that that's something that needs to be resolved. And I also think that a lot of investors out there use this in a way that isn't conducive to the conversation. So a lot of investors, and I was doing this myself, are very much in the judgment mode of mind rather than in the coaching or being generous with their wisdom. And so I think those are the two things that need to come together. You need to build that relationship of trust. And once the trust is there, if the motivations are right, meaning that the entrepreneur is seeking information rather than validation, and then the mentor or the investor is giving true advice rather than giving judgment. I think then all of a sudden you have the conditions for a great conversation. And those are the kind of conditions that we try to create for all the entrepreneurs that we work with. And that's not just the entrepreneurs in our portfolio, but all the entrepreneurs that we connect with. We do believe that, we have, in our $100 million fund, we can't invest in everyone. And so it's tough. It's a tough decision, but we do believe that all entrepreneurs can succeed and they can succeed without our money. And so we would love to leave everyone with a little bit of our wisdom. And hopefully that's helpful in every conversation that we have.
That sounds quite fulfilling as a role, much more than just being noisy, analytical, and judgmental, I would say, to be actually generous. And I wonder if that's what was one of your quests, because I just want to share maybe in our research, what we've seen, Pat, is that most exited entrepreneurs go through this phase of being a bit lost for a year or two. Some stay in it. Some are lucky, like you, to find support, help, and also track that where they discover they're great at it and they can feel fulfilled. But through that transition, fulfillment is quite a big question. Like, how do I get fulfilled, or what's the impact that I can have, or how can I help? So I'm sensing that you found this in those relationships in that community. Would that be fair to say? Or else, what other questions were you asking yourself when you were in that transition?
Yeah, I think you're constantly trying to find your place in the world. I was trying to find my place in the world when I was 5 years old. I remember those times being a misfit. I remember trying to find my place in the world when I was working at Adobe. I
Yeah.
was struggling to get to the position that I actually wanted to be in. And I was struggling to be a better entrepreneur. And today, I think the struggle is to be a better investor. And so I think there's a lot of um, there's a lot of motivation and a lot of purpose to having struggle be a piece of it. I think the question for me is whether or not you're feeling like you're moving the yardsticks, as it were. So are you advancing every single day? And it takes a lot of ego destruction to get there. And and so what I discovered in my latest journey is that I have to be able to take a lot of criticism. And I think that this is something when I was younger, I would lash out at anybody that would critique my work because I thought my work was obviously perfect. And that meant that created a cycle where people would give me less and less feedback, right? Because it just wasn't a good experience for them. I think today, what I'm trying to build is an experience where I'm inviting a lot more feedback. And so when entrepreneurs are asking for advice and I'm giving them advice, I want to hear feedback. Is this decent advice? Like, I want you to index me against all the other mentors that you've talked to. I want you to tell me how you're feeling right now about this.
Mm.
Is it something that's useful, not useful? Is it motivating, demotivating? Because I need to know to become a better coach. And I think that a few years ago, I probably wasn't as open to that. And I'm just trying to be more open to that as I go forward. And the key is not to have a defensive reaction.
Mm.
And I'm trying to coach all of the entrepreneurs in my world to also not have a defensive reaction. So my current mission is to up my game as a mentor. And I think the core of it is being able to take feedback and being able to take criticism, because the only way that I can get better is to get feedback on how well I'm doing and all the things that I'm not doing so well. So what I've been building into my coaching sessions is I've been asking the people that I've been talking to, how does that feel? Is that good feedback? How does that compare to all the other feedback that you're getting? And I need you to critique it. Are you walking away more trustful of me and the advice that I'm giving, or are you doubtful? And I've been adjusting the way that I've been delivering it. And I think that in this interaction, what I found is that sometimes there's a lot of ego involved. And so people, I think, have a tough time hearing criticism. On the entrepreneurial side, I think entrepreneurs typically are looking for validation, and they really need to adjust the way that they're thinking. And what I've been referring them to is Adam Grant's book, Think Again, where you could be one of the three P's or the S. The S is a scientist. So imagine having conversations and just being a scientist and going, oh, that's interesting. I'm going to take down all these notes and I'm going to be a little more curious about things. Or you could be one of the three P's, which is you're a preacher, politician, or prosecutor. And that's what happens when people attack our ideas. We get defensive and we start attacking them back in one of those three styles. And so my example to them is this. If you talk to 100 investors and you defended yourself with one of the three P's, instead of being a scientist, what'll happen is you would have just had 100 arguments, as opposed to having 100 conversations where you play the role of a scientist and people are attacking your idea. And you started asking, why don't you like this idea? What do you think would work? What advice would you give to us to pivot? You would have had 100 conversations with some presumably smart people, and you would have gathered enough evidence to pivot your business. And so I think my mission just overall is to make sure that we can all have better conversations in the ecosystem. And not only that, we come out of it as better entrepreneurs and better investors. And I think we all have a role in that. And so part of what's fulfilled me is just getting out there and just facilitating better conversations. And I think that if I can leave a little piece of that with everyone, the word can start spreading and we can build more trusting relationships in the community.
That's beautiful. It's interesting because a lot of what I'm hearing from you saying is that this container of your work and investment is really a container to fully go really deep with your values. You know, you mentioned the word wisdom a lot. You talk about having a philosophy and how it allows for a type of relationship and connection. And it's interesting because from the outside in, a lot of what people think about capitalism or entrepreneurship more widely is actually quite the opposite. And that's part of, as well, our theory of change. We think we believe that specifically post-exit entrepreneurs could be forces for good and can be a motor for creating a different type of world. So, do you have moments? How do you take time to think, to reflect, to engage on that deeper thought?
Well, yeah, I agree with everything that you said there. I think it's a tough journey because we're so busy with doing all of our work every single day. But I think that we endeavor to remind ourselves that we have a uniquely human business. What we think we have on the surface is $100 million, and we think it's a quantitative business that we go through due diligence and we look at spreadsheets and we do research and we do validation and we do business plans and we do investment memos. And it feels like that's what the job is. The reality is that this is $100 million pool, which is an endorsement of people. And those people are entrepreneurs and their abilities to build teams and to see the future and to bend space and time. And so I think more and more so as we dig deeper into the investment world, what we start to realize is that we're not investing in business plans, we're investing in people. Because business plans can change, but people are much harder to change. And so we became just much better at working with people and at understanding people. And so I think that's the drive, is that to create better outcomes, we have to become better people ourselves. And we have to have the ability to spot better people and together go on the journey of just working with the best entrepreneurs. That means that we have to be the best investors in the world or the best humans in the world to earn our right to be in the ecosystem. It sounds a little bit soft, but I think that if you go through all the best investments in the world, and you talk to all the best investors and entrepreneurs, they'll tell you it's the character of the entrepreneurs and the investors that pulled them through the difficult times. We continue to believe that, and we continue to invest in that. And it's been incredible as far as the journey goes. And this is to say that it's a very tough journey. We're not perfect. We hire coaches that come in and help us tune up our mindsets. And mindset is so important. And we ask our team to help keep ourselves on track. And so our analysts and associates and principals, they have been given full permission to just put up their hands and just say, here's what's wrong with the organization, or here's what I don't like about what you're doing. And we hear this on a regular basis, and we address these issues.
It's great. And what would you like to share to our audience? I mean, I'm sure they're curious about your fund. I don't know how much they know about the VC world. It's quite a big deal to have created such a big seed stage fund and have succeeded at it. So I don't know if you want to share a little bit about that and yeah, and the fund specifically right now, type of activity. Yep.
So Panache Ventures is a $158 million asset under management fund. We started with a $58 million fund one. We're currently on a $100 million fund two, and we're currently raising a $100 million fund three. What we've done with that money is we've invested in some of the top Canadian entrepreneurs over the last 8 years. Our returns are in the top quartile. And so we've done well by not only the entrepreneurs in our portfolio, but by the investors that have put their trust in us. And so how do we operationalize this? We believe that building the relationships maybe a decade in advance is the way to do it. So we believe in immersing ourselves in the community. So we have people on the ground in Vancouver, Calgary, Toronto, and Montreal. And we go to all the other places where entrepreneurship is happening throughout the country. And we try to speak to entrepreneurs even before they form the idea in their heads. So we're doing university guest lectures. We're at startup boot camps. We're at the accelerators, talking to all the entrepreneurs. We're also talking to the top technology talent across Canada. So if you're working at a technology company, we're probably knocking on your door, just trying to have a coffee with you, hearing what you know about the industry and trying to hear about what you think is the next big thing. So establishing that relationship early, I think, is so important, because I don't think entrepreneur necessarily is that kind of flash in your head, at 5 a.m, and then all of a sudden you're building the next day. I think it develops over time. And so we get a lot of entrepreneurs that will come to us and just go, we had a talk 5 years ago, and over time I've developed this idea, and today I'm ready to pitch you. And that's just music to our ears, because that's the ecosystem that we've been building over the last 8 years and running the fund. But really, in the last 20 years, since my exit from iStockPhoto. So that's the basis of what we're doing at the fund. As far as what happens after we invest, we have an extensive network of founders and investors and partners that we go to, because what you need to do is not just prototype your product and find early customers and investors in the early days, but as you scale, you need to reach outside of Canada. Canada is probably 5% of your ultimate revenues by the time you fully scale out. If you look at the world GDP maps, Canada probably sits under 5%. You'll probably get 50-60% from US revenues, and you'll get 40% from rest of the world. So the question is, how do you get there? Who do you know in those territories? How do you form the partnerships? And how do you build a team to basically build something where you can duplicate your playbook throughout the rest of the world? And so these are the kind of things that we help with. And by the way, you have the pressure of doing this within 10 years. And so I think that teams naturally get tired. So you need to keep them motivated. If it's a 20-year journey, you might lose a lot of people along the way. You might lose some of your investors along the way as well. So I think to keep everybody motivated, it's a super tough job for the management teams of these startups. You've got a lot to do, a lot of considerations to place, and we're there alongside the entrepreneurs. What we do is we really take a walking the path alongside of you rather than kind of sit as governance, telling you what to do, because that's the way we think great businesses are built. And that's what great partners are all about. And having been former entrepreneurs ourselves, we understand the journey and we understand what support it takes to get there.
Great. Yeah, wonderful. Right now in the world, in entrepreneurship, geopolitics, AI, there's a lot of uncertainty and fear. But on the other side, I'm curious about what makes you hopeful. What do you feel enthusiastic?
Yeah, I think there's a lot of things to be hopeful about. My view on conflicts is that a lot of the conflicts in the world are brought about less by animosity, and brought more about because of fear. I think people are, when they're uncertain, when they don't understand where their next meal or paycheck is coming from, and when they feel unsafe, I think there's this natural instinct to just lash out and to blame others. And I think that that compounds. And so if I lash out, another person will lash out back at us, and it just creates this knock-on effect. And I think that I'm hoping that the world will get to a point where we understand that we're just creating, there's a lot of fear out there, that a lot of stuff is said with fear and not necessarily hate. And we can fix this. And so that's kind of my overall hope for the world. And my hope for the world is that technology can be a part of that solution. So I do think that technology is advancing rapidly. Well, I know it's advancing rapidly, and we're trying to basically make work better. We're trying to make life better with all the technologies that we're investing in. And I think that over time, what you could possibly see is that people can be less fearful about the world that they live in, is that we can build more, that we can use technology to build more trust and build more conversations, that people can do things that are a little more joyful in their lives. And so for the people that are struggling with sitting at a desk and looking at spreadsheets all day long, all that stuff is going to be automated, and you'll be able to do something much more fulfilling in your life. That society will be a lot more productive because people can do things that actually produce units of good rather than reports. So I think there's a lot of advantages out there, and that's the world that we're seeking. But it's a tough thing because you can't tell the future, and there's a lot of fear in the near term and in the short term. Don't think I have the answers for everything, but I think the more we can do to create more understanding in our worlds, the better. So we're just encouraging people to get out there, talk to more people, and create better understanding of the world around them.
Yeah, for sure. We believe that as well. Like people just need to connect with each other and talk to each other, and through that, I think everything can get.
I wonder if there's anything that informs your investment decisions in relationship to that. Meaning, like, because I know you invest in every technology. There's no theme, right? There's no like, it's not an impact or like theme specific focus. Yet you have values. Yet you have a vision of the future. So how does that inform how you invest?
Yeah, we are a generous fund, but we do invest in pre-seed and seed, and we do focus on 4 areas. And so that's AI, security, fintech, and health. So those 4 areas are the areas where we're more likely to invest than anything else, and that's where you'll see in our past portfolio the focus has been, and where most of our success has been. But I would say that what we're looking for in, as far as a general theme goes, is always invest in the entrepreneur. So the entrepreneur is at the forefront of that. As we get a little bit deeper, we're really, really looking into what's in their head as far as their vision for the future, and seeing if we can be a part of that journey, and whether or not we can help them fulfill things, that the tools, and basically be a part of the tool set that they need to fulfill their vision of the future. And so if you look a little more specifically into what that means, we really want to invest in entrepreneurs that want to have big impact in the world. And I think that's the way venture capital is built, is that we think that the businesses that want to create kind of like localized impact are good, but they're probably not suited towards venture funds. So we think that entrepreneurs with a vision to have worldwide impact is the key. And there's a little bit of a disruptor mentality as well, which is what they're saying to the world is we don't think the way that it's being done now is right, and there's a lot better way to do it. And so these are the entrepreneurs that we typically invest in.
Great. I wonder if you have advice, anything you'd like to tell our audience in terms of either exiting transition or investment, like any wisdom you'd like to share?
Yeah, for sure. Well, I think there's a couple of things. I would say read from strength to, or I would say a couple of things. I would say read from Strength to Strength by Arthur C. Brooks. I know it's a book that you guys recommend.
Yes.
And, what it talks about is just how important it is to use that crystallized intelligence curve that we all have as we get older. And that's basically, you have wisdom. And then the question is how are you delivering that wisdom? And so the second step is really get good at being a mentor, get good at being a coach. My journey was around not only doing the coaching, but really getting trained as a coach. So I was fortunate enough to join a couple of local community organizations that were promoting mentorship relationships, and they brought in some incredible coaching seminars to basically bring us the resources to basically practice and to understand the coaching process. So I think for me, the lesson really was that it was only after the exit that I started taking some of these courses. And so I really have to put an apology out there to all the entrepreneurs that I coached before I took the coaching courses, and maybe even during the coaching courses, because it took me a long while to get there. And so if you can, how we qualify most of the entrepreneur coaches out there, we basically qualify them by saying that if they've had an exit, they're probably a good coach. That's revised in my head now. Having been through that journey myself, I know that I didn't become a good coach until I had the exit and I had the coaching courses and I got some coaching experience in. Only then did I start becoming, I think, somewhat acceptable as a coach. I think all before that, I might have been delivering the right advice the wrong way. I might have been delivering completely the wrong advice. But either way, I look back on that and I'm somewhat embarrassed by.
Yeah, and a posture of a coach is completely different, right? It's like it's completely different than a mentor and advisor. It's
Yeah.
doesn't mean you can't combine both and be a great coach with advice. Yet the
Yeah.
way they'll give advice will be different, right? So
Yeah, and I think that people are unclear about what they want. I think this is both entrepreneurs and investors. They're unclear about what they want out of a conversation. And so, for instance, as an entrepreneur, what would be my motivation for giving an overly harsh critique of a business? There's just no advantage to me doing that. And I think often, I have to stop myself and just go, what are they going to do with this information? And so you have to deliver something that they can take that's constructive and basically build upon that. So if it is something that is kind of harsh or that's kind of tough, let it have a point. And I think the same deal with entrepreneurs is that when I coach, if I get a little more time to coach the entrepreneurs that I've just met and they're presenting as very defensive, I'll often stop that conversation and just go, are you getting anything out of this? Because right now there's a lot of pushback and I'm not sure that we're hearing each other. And so this is when we talk about the 3 Ps and the S, and they just go, oh, interesting. So maybe I should be a little more curious and listen a little bit more. And I just go, look, use the conversation as you wish, but I just want this to be useful for you. And I just want to give you my pattern recognition. So as long as we can get there on these conversations, I think that that's probably the most fulfilling piece as far as transitioning from being an entrepreneur or an operator to being an investor and an advisor or a coach is just having better conversations. And so for me, it took me quite a few years to get there because it felt like the early conversations were more debates. And then as I evolved the style and as I got a little more coaching on my own coaching style, it started to evolve to a point where I started to build more trust with the people I talk to. And sometimes you can establish this trust within 5 minutes. And I think that's the real trick is to get the conversation that used to take hours down to 5 minutes where you're establishing trust, where you're delivering that wisdom. And so that's ultimately my kind of KPI driven goal as an entrepreneur slash investor is how can I have more conversations with more entrepreneurs that are better?
Great, Pat. Well, thanks so much for sharing. I'm sure that's a lot of entrepreneurs will enjoy and benefit from that feedback. Where can they reach you if if they're interested, curious about Panache?
Yeah, just
Or your
find me on
thought.
LinkedIn.
Yeah.
Good. Awesome. Great.
Or maybe they'll stumble in a conference in Canada, in the US, or hear you speak somewhere.
Definitely. I'm at
Great.
all the conferences, so please reach out and say hi.
Okay, wonderful. Well, thank you for your generosity.
Yeah.
Yeah.
It's been wonderful to learn about your approach and how you think about things, and we're really looking forward to learn more.
Right on. Thank you. Great to meet you.
Bye, Pat.
Thanks.
Bye-bye.
Great. Bye.
Bye.